Hi day traders, I hope you're all well and trading safe. It's Tommy from Best Broker Online, giving you a brief rundown of the main events from last week. The stock market last week was very eager to put the entire blow from the pandemic behind it. With recent spikes in COVID cases and the fluctuations in economic data, the market seemed to be stuck in a range. Cases in the US were on the rise from the beginning of the week, and over the weekend, over 3,000 cases in one day, the most since 1st of May. On Friday, stocks rolled over to trade lower following news Apple planned to close some US stores due to rising levels of COVID-19. A total of 11 Apple stores will be shut in Florida, Carolina, and Arizona. In the commodities market, we see gold finish above $1,750 for the week. The fear gauge is starting to creep back up as the worry about a second wave and the risk of another economic shutdown sway people from riskier assets and turn back to safe havens like precious metals. Now, regarding oil, we see a jump of over 9%. Previous week, it dropped over 8%. Crude oil inventory showed a gain of 1.2 million barrels in stockpile over the week to hit another record high at 539 million barrels in storage. In the currency market, fears of a second wave have increased demand for safe haven assets, putting the US dollar on track for its best weekly gain in a month. Also, safe haven assets like the Japanese yen, Swiss franc ended up as the biggest gainers. The euro was slightly weaker for the week, down 0.12%. Looking ahead for next week's major events and forecasts, the main economic indicator in focus for investors this week will be the rising US corona case count. While the International Monetary Fund is to slash its global growth forecast, it's going to be a quiet week on the economic calendar, with updates on the housing sector, durable goods orders, and of course weekly jobless claims in the US. The Eurozone and the UK's PMI data is likely to remain in deep contractionary territory. In gold, the yellow metal hit a 2-week high, decisively crossing the 1750 mark after Goldman Sachs revised its 12-month forecast by 11% to 2,000 an ounce over the next 12 months. Any further gains in US COVID cases and a sign of lockdown easing being disrupted may make safe haven asset prices appreciate over the next coming weeks. The price may rally to a target resistance levels of 1800, 1850 and 1920. In case the bears interrupt the bull movement, which may have its target at 1736 to 1643. Now, that's all from me, Tommy at Best Broker Online. Remember guys, trade safe, and no one trade can ever make you or break you. Also, remember to follow us on all social media sites and press the subscribe button. Take care.